Good afternoon, ladies and gentlemen. I am Pradeep Ghorpade, Chief Executive Officer of India Pulses and Grains Association. And on behalf of the IPGA Managing Committee, it's my honor and pleasure to welcome you all to this Chickpeas and Lentils webinar jointly hosted by Austrade, Pulse Australia and IPGA. I do hope and trust that your family, colleagues, and you personally are in good health and taking all the necessary precautions to stay safe in this pandemic. I'd like to thank Staurt Rees, Harsh Mohanpuri, and the entire Austrade team for initiating the idea of hosting this webinar with IPGA. And of course, a big thank you to Nick Goddard, Chief Executive Pulse Australia, my co-moderator today, for joining hands with Austrade and IPGA to host this webinar. In today's webinar, we are focusing on the scenario for chickpeas and lentils in Australia and India. This will cover production, price outlook, import and export potential, expected trade volumes, etc. between India and Australia for these two pulses. We have with us domain experts like Nick Poutney, Director of Pulse Australia, Peter Wilson, Managing Director Wilson International Trade, to present the Australian scenario. And representing India will be Anurag Tulshan, Managing Director SRCO Exim and IPGA's E-Zone Convener, along with Nirav Desai, Managing Partner of GGN Research. I think most of us know all of them and don't really need too much of an introduction, but each one of us, we will introduce each one of you as and when you come in to speak. I'm quite sure that the information that will be presented today by our panelists will give you an insight into what the near future holds and helps you make informed business decisions. One request to all the people in the audience, there is a Q&A link at the bottom of the screen. Please use that to post your questions so that when we do the Q&A session at the end of each session, we can take the questions from there for the panelists. I now request my co-host Nick Goddard to take the proceedings forward. Over to you, Nick.
Thank you, Pradeep. Good afternoon and good evening, everyone. It's an absolute pleasure to be able to co-host this webinar, the first of its kind between IPGA and Pulse Australia. I'd just like to start by acknowledging the presence of John Southwell, the Australian Agricultural Councillor based in Delhi. He's the Australian Government Department of Agriculture and Water and Environment representative, who is typically based in Delhi and does a lot of liaising with the Indian government on behalf of the Australian government, and a lot of that work is around pulses. So welcome, John. But I'd also like to acknowledge the current crisis gripping India and pay respect to those that have lost their lives. As many as you may know, Australia has a large Indian population, large and growing and very welcomed Indian population. So invariably the situation in India is heading our news on a nightly basis. So we are very much in touch with the situation that you're facing, and we wish you well as we go forward. Australia and India have had a very long and trusted and prosperous trade in many agricultural commodities over the years. In fact, my father was one of the first wool traders into India, and many of the fine Indian suits and certainly the Indian carpets were made with Australian wool. And of course, we have a long and proud history in trading pulses. And while we absolutely acknowledge and in fact support India's aspiration of becoming self-sufficient in pulses, we also recognise that there are some bumps along the way, and it doesn't take much to upset the apple cart in terms of failure of monsoon or a slightly harder than expected monsoon to actually impact the supply of domestic pulses in India. And Australia stands ready and waiting to be able to step in to supplement any shortages. In fact, I've often heard of Australia being described as the backup generator for India's pulse supply. And I think tonight will be a great demonstration of the examples of the two countries working together to improve the trade situation for both. So I'd like to kick off with our first speaker for the evening, and that is Saurabh Bartier, who would be known to many of you. He is the senior trader for Bartier in India, and he also heads the Pulses business for Bartier. He brings with him a rich experience of over 15 years in the industry, and he also represents India on the Global Pulse Confederation and is an executive committee member of the IPGA. So I hand over to you now, Saurabh, for an opening remarks. Thank you.
Thank you, Nick. Good afternoon to my friends in India and a very good evening to Australia. I shall start by appreciating you all for taking time out of your schedules and joining us for this webinar. I also thank everyone associated with the Australian government, Pulse Australia, Australia-India Business Exchange, and IPGA for planning and arranging the platform for all of us to exchange our views. When I started my research on the relationship between Australia and India, the first 50 Google search results were only about cricket. And soon I realized how wonderful it has been to witness one of the most amazing rivalries in our favorite game over the last few decades. But what doesn't get its due share of headlines is the political, economic, and trade relationship that both the countries have enjoyed over the years. India boasts of one of the largest and fastest growing expat population in Australia. And in turn, India always features amongst the top 10 trading partners and export markets for Australia. In Pulses too, the relationship is of utmost importance, with India constantly needing supplies of chickpeas, lentils, and of late some small quantities of mung beans and faba beans is also finding its way into the Indian market. I would request Pramod to share a slide of India-Australia trade, which will give a fair view on how the business is between the two countries. So if we look at the slide, lentils share on an average has been between 10 to 15% over the last 7-8 years, except in 2017-18 when it shot up to 30% due to record lentils crop in Australia. In chickpeas, India used to import 80 to 90% of requirement from Australia until December 2017, after which it has reduced almost to zero due to 66% import duty, thereby making imports unviable into India. However, 2021 could be interesting as we are seeing all pulses trading above the minimum support price, and after 4 years, government stocks are at a low than what they have been previously. This is basically coming from the point that we definitely have had issues in our production of pulses in the last Kharif and Rabi season, which led to the prices going to above MSP and to government stocks dwindling to a 3 to 4 year low. Therefore, the import policy going forward will give further direction towards the viability of the trade from Australia to India. That's all from my side. We have an elite list of panelists in today's discussion. So over to you, Nick. That's all from my side.
And India. All right, we'll now move to the first speaker for this evening, who will take us through the Indian situation for pulses, and that's Anurag Tulshan. I think he'll be known to many of you indeed. He's the Managing Director of Isarco Exim Proprietary Limited. He's also the East Zone representative for IPGA. He very much is at the helm of Isarco, which is a family-owned business, and his particular area of focus is in pulses. The business, as you may know, with Isarco is a long-standing family business going for something like 5 generations, and Anurag is the Vice President of GPC, so the Global Pulse Confederation, and also is on the board of IPGA, which needs no introduction. But he also serves as Chairman of the Pulses Committee on GAFTA in London, and is also Board Director of GAFTA. So it is with absolute pleasure that we invite Anurag to give us those insights and overview of the Indian lentil situation at the moment. Thanks, Anurag.
For the introduction. Very good afternoon to all my friends, ladies and gentlemen, distinguished guests, and my business associates all across the world. Good evening to my Australian friends, and good morning to ones in the US, Canada, and the Western world. We are all here to discuss the lentil scenario between Australia and India. Australia has always been a very, very dependable partner for us Indians, and in the past, as Saurabh said in the beginning, we have had huge imports of Desai chickpeas as well as lentils coming in from Australia. As late as 2017, as Saurabh said, we have gotten big quantities, but now due to some duty changes, the Desai chickpeas volumes have gone down, though we still keep continuing importing lentils from Australia. First of all, on this auspicious day of Eid, I would like to wish all my Muslim friends across the world Eid Mubarak. And in these difficult times of the global pandemic, which I'm sure has touched every one of us in some way or the other, we all pray to God that He just gets all of us out of this pandemic, and that we go back to our older days of laughter, joy, merriment, and celebrations. This afternoon's webinar with regard to the Indian scenario of lentils, I will take you across the facts and figures which are in front of us. Let us begin with the Indian aspect, that is the crop size. The crop size, as per the Indian government figures last year, that is for the year 2019-20, was about 1.23 million tons, which later the government revised as per the fourth advance estimates to approximately 1.1 million tons. But at that time also the trade estimates were considerably lower, and people in the trade were estimating the crop to be approximately 900,000 to 1 million tons. Coming to this year, the government estimates regarding the Indian crop size of lentils has been 1.35 million tons. But again, as per trade estimates, it should not be more than 900,000 to max 1 million tons. The crop size has been lower this year, and the prices which are ruling currently are a witness to it, and we are sure that the figures put forward by the government are not exactly what it should be, and we are definitely in with a lower number this year. So the total consumption of lentils in our country is approximately 1.8 to 2 million tons a year, which translates to roughly 150 to 170,000 tons every month. So we are definitely dependent on imports of lentils. And Canada, of course, is our biggest supplier, followed by Australia. These are the two major origins from which we have been importing lentils. And if we look at the figures, last year from February 2020 until January of 2021, India imported almost 1.05 million tons of lentils collectively from Australia as well as Canada, though Canada was the principal supplier. And the two major sources, as I said, for us is Canada, and which is followed by Australia. The Canadian figures, if we go into them, last year their crop size was almost, for reds, it was approximately 2 million tons. And this year the crop size estimated is going forward is 1.8 million tons. The weather across the US and the Canadian prairies is quite dry this year, so they are looking at a lower crop number. And the availability, of course, for exports from Canada will be lesser compared to last year, due to, as I said, the dry weather. Secondly, there are some more destinations which are more active this year, and they are looking at more quantities. Just to give an example, Turkey, which typically produces about 400 to 450,000 tons every year. This year, the crop size which they are looking at is almost around 200,000 tons. So there is an additional demand of approximately 250,000 tons, which will be coming forward from Turkey. And there is, of course, additional demand from other destinations, because they are also anticipating that Indian duties might come down and the markets might ramp up. So the other destinations, namely Bangladesh, Pakistan, all of UAE and Colombo, they are also fairly active, and they are buying constantly, both from Canada as well as Australia. If we go into the Australian numbers, the lentil figures for Australia last year were typically around 700,000, of which a very, very major chunk has already been exported and not much is left in Australia. And typically in Australia, the seeding is going on right now for red lentils, but then the major red lentil areas, that is southern part of Australia, it is still very dry out there. So the numbers are still not very clear as to what estimated crop size we are looking at going forward. So the supply definitely from Australia also is anticipated to be lower compared to last year. Now, coming back to the Indian scenario, we need to see where exactly we stand in terms of stocks, in terms of prices, and in terms of projected prices going forward. If we look at the inventories all across India, we are today sitting with almost about 350,000 tons approximately of red lentils. This includes, of course, imported red lentils, which are around 200,000 tons, which are sitting at all major ports like Mundra, Kandla, Hazira, Mumbai, Kakinada, and Calcutta. And we have approximately 150,000 or max say 200,000 tons of Indian Desi red lentils. So right now we have an inventory, as I said, of about 350 or max 400,000 tons, which should be 2.5 months consumption. So we are right now in the middle of May. So typically until the end of July, we have stocks which we can use going forward. But then we need to import more. And right now, if we look at the pricing, since the very beginning that we harvested the Indian crop, the Indian prices have always been at a disparity compared to the origin prices. Like in the beginning, when Canada was offering at around $590 to $600 basis CFR Indian ports, it was translating to almost around 60 to 61,000 basis 33% duties. But at that time, the Indian markets were around 50 to 51,000 near the MSP levels. And then later on, as we started progressing, the markets in Canada started going up. Looking at the Indian crop numbers, the markets in Canada also started going up. There was buying interest of India, but because of the duty impediment, there was not much buying going forward, and we were dependent on the local Desi or the local red lentils. The Indian farmers were getting prices which are around MSP or above MSP, so obviously their choice was to sell in the open market. So the Indian government agency, which is NAFED, they really could not buy much stocks from the farmers, and the farmers were much happy selling in the open markets to traders. Current offers from Canada are around US dollar 800 plus, and even offers from Australia around the levels of 800 plus, which at current duties are almost equating to 80 to 81,000 rupees per ton, whereas the local market prices are in India at the ports are around 63 to 64,000 rupees. And even if the duties come down, as last year the Indian government reduced the duties from 33 to 11%, and if we are to equate the costings basis $800 and taking into account import duties of 11%, the cost would come to almost about 68,000 rupees. So there is still a wide gap between the landed prices considering the duty reduction and the ruling prices in India. So Australian prices also, as I said, are around $800 plus, be it nippers or nuggets. And though honestly, there's not much buying interest at these levels, because of course, India, it's totally unviable until we have some clarity on the duties. Some destinations may be buying, but lately the price spurt also has been very recent. So we still need to see if at these prices, there's really big buying going forward. And now we need to see the reasons why there's been a price spurt in both Canada and Australia. Of course, the major reason has been that people are anticipating the Indian duties to come down. Secondly, the freight rates also have played a major spoil sport. The container availability as well as the container freights have been very difficult. The container freights, which were typically around $60 earlier from Canada, are now being charged at almost $90. The break bulk freights from West Coast Canada, that is from Vancouver to West Coast India, for a vessel size of 50,000 tons, which was typically around $30, say a month ago, are now being asked for around $70. So there has been a huge freight increase. And on top of the freight increase also, the problem with regard to container shipment is the availability of equipment with the shipping lines. So all these factors compounded, and this has caused the prices to rise. Now, with regard to the Indian context, with regard to the consumption and the demand going forward, the factors which could affect us predominantly would be, the major factor would be the COVID situation in India, which is really very bad. All of you are aware of the situation that we all are going through. And most of the states have gone into some sort of a lockdown, either a complete lockdown or a partial lockdown. And of course, all the restaurants, pubs, malls, shopping centers, entertainment centers, they are all shut. All the major gatherings are being avoided, and even functions, marriages, and parties are on hold. So there would be some dip in consumption going forward. There's my feeling. The HoReCa segment is really not performing. So there will be some challenges. But then again, to sum up, I think that the current S&D situation is tight. The government needs to come forward and make some changes with regard to the duty structure so as to get in more cargo, because going forward, I believe from the month of July until December, we need to import at least 500,000 tons collectively from Canada and Australia, from both these origins. And as I explained to you, the pricing going forward at current prices, I don't see the markets in the origins going down much, but they'll have to correct a bit to be in tandem with the Indian prices. There's still a difference of almost $60, $70, and this gap needs to be bridged by either the origins coming down and maybe the Indian markets coming up a bit. So I think the next few months are going to be very challenging, very interesting, and very adventurous, I feel, and I'm looking forward to opinions and the ideas from my Australian friend, Nick. And let's see how the audience also reacts and what their questions are. So waiting for them. Thank you so much.
Lovely. Thank you so much, Anurag. That was extremely interesting, and certainly in a very unusual situation with so many factors coming together there. Obviously, the overbearing one being COVID. We do have a question that's come through during that, and it's one that also entered my mind, and that is with the Rabi harvest now complete. You indicated that there was, I think it was maybe 200,000 tons in stocks, and the question is, how can this be so low, so close to the harvest having finished, or do you expect more domestic stocks to flow through?
Is available with me, Nick. I think the numbers which I was getting were around 200,000 tons. Basically, I feel the biggest challenge here is to identify the true Indian crop size. Because of COVID, there have been a lot of disturbances, proper I think research or the proper, even the government agencies were not able to gather all the information. Trade has always been giving a different number. It is a pity that the government figures and the trade figures are never matching in India. So the figures available with me, I think that the Indian crop or the Desi local lentil crop, we should be having approximately 200,000 tons.
Mm-hmm. Mm-hmm. I guess the question,
because there has not been much of imports coming in over the past few months because of the higher duty structures.
So with the crop size of the crop size of 1 million tons, estimate give or take, and 200,000 tons in reserve or in supplies. I guess the question is where is that the gap come from, the 800,000 tons that might have been consumed in the last 3 or 4 months?
The consumption has been high in the past few months, but then again, as I said, that the trade, maybe some traders are anticipating a crop size of 1 million tons, but again, there are some traders who believe that it's not even 800,000 tons. So there is a lot of controversy as regards the Indian crop size is concerned. But in totality, I feel that the Indian, if you take into account the imported lentils as well as the Indian local lentils, we should not be having more than 400,000 tons of inventory.
Okay, thank you. And another question, are there any new origins that you see on the horizon that may be considering to start grow lentils and supply lentils?
There are origins like Russia and Kazakhstan. These are origins which internationally are coming up, but we have some issues with regard to the plant quarantine. And currently lentils from both Kazakhstan and Russia are not allowed into India, but I've been told that work is going on, and maybe going forward, we could be seeing these lentils also coming into India.
Right, excellent. All right, well, thank you so much for that, Anurag. That was very good. And I think when we'll do a top and tail now with the Australian context, and the opportunity for some more questions at the end of that to perhaps cover both. And I can see Nick Poutney there. So I'd just like to introduce Nick Poutney, who would also be known to many of you. He's a director of Pulse Australia. He's based in Sydney, and he's an independent consultant. He spent many years with GrainCorp, leading the Pulse desk as a senior trader, trading of pulses and specialty crops. And prior to that, he'd spent 8 years in Geneva with the Australian Wheat Board, and then with Viterra, with a focus on trading pulses. So when it comes to pulses, both on the local and the global front, Nick is certainly well versed, and his opportunity this evening to really provide an update on the Australian lentil crop, and most of you would appreciate it's just being sown at the moment. There's still a little bit more opportunity for more sowing in the next few weeks, but after that the window will close and we'll have a better idea of how many lentils will be sown. But at this point, Nick, I'll hand over to you. Welcome.
Great to put this together with the IPGA and Austrade. We're thinking of India. Our thoughts and prayers go out to India, and it's a difficult time. Now, I'd just like to bring up a slide presentation, if I could, please. Okay, you can see that. That's okay. Good. Okay. Always difficult to follow Anurag, and some of those comments. After all that I listened to what Anurag was saying, I did notice at the very end there his comment that price at origin was quite expensive and needed to come down. So what I'm going to do is some of the information that Anurag and Saurabh as well had mentioned earlier. I've just got this in chart form as well, just to help some of those. As Saurabh mentioned, Australia represents between 10 and 15% of the Indian import requirement. I just want to provide some context though. On a global perspective, Australia represents around 15 to 20% of global trade. As most would know, the Canadian global trade would be circa 60 or 70% of global trade, where Canada would produce nearly 3 million tonnes and export 2.5 million tonnes. Australian trade sort of fluctuates between 400,000 tonnes and 900,000 tonnes. And what I've just done here is just indicated, I guess, the relationship between Australia respective to the Canadian imports into India. These numbers, I should qualify, if they don't make sense to people, it's on the Indian April to March year. All the numbers have been taken off the import customs. Now, the second chart at the bottom, I was just trying to work out really with the window of opportunity with the relaxed lentils import tariff in India. if there was a bump in imports, and really it was fairly consistent through the season. And relative to last year, there was a little bit of a tick up in November, a little bit of a tick up in August, but really it was a fairly consistent program. So India imported just over 1 million tonnes from the most recent April to Jan season. So it's a big import program. So the Australian context. Look, just what I want to do here is demonstrate, I guess, where some of our numbers come from and why we come up with some vague numbers. There was two main reference points for Australian stats. The ABS, the Australian Bureau of Statistics, have some very reliable export stats, which are accessible through Pulse Australia. We also work on, and the Pulse stats will come out 2 or 3 months after they've been executed, after they've departed. ABS put out production estimates, and they really are just a best guess. Now, what this chart demonstrates, unfortunately, is that the Australian government estimates are fairly consistently a little bit lower than the actual of what's actually produced and shipped. So we kind of have the opposite problem that Anurag was pointing out, where in India, the government might be estimating 1.2, 1.3 million tonnes of lentils production in India. Trade might be around 900,000 to 1 million tonnes. The opposite in Australia, our government is underestimating our production. I'll come back to this because it's important to, I guess, illustrate where we might be for looking at the new planting intentions and where the crop might be for 21-22. What is also interesting with this chart, though, is that our hectares are relatively stable. So the swings in Australian production numbers usually come from yield, usually come from the weather. But our hectares are fairly consistent because 90% of our crop is produced in 2 states or 3 main production areas, the Yorke Peninsula in South Australia, and the Mallee region and the Wimmera regions in Victoria. This is the export pace now. The latest statistics that came out just over the last few days that showed us March, up until March for 2021. And what we can see from this chart is that we are really exporting at a rapid pace this season, which is indicating a crop for us on the high side, probably you know, an 800, 900,000 tonne crop, probably going to export close to 800,000 tonnes, considering what we know here in Australia of what's actually been shipped in April and some of the bulk vessels that are in the works as well. So the export pace this season is pretty strong. What I'd say here too is that growers aren't holding much stock. It's really with the trade now, and again, prices are moving firmer. So what's going to happen from here? All I'm trying to demonstrate with this chart is the situation that we found ourselves in April 2020 versus April 2021. Now, for those who need a reference, I've circled on the right-hand chart 2 zones. That is the South Australian cropping zone, Yorke Peninsula, and in Victoria, more or less, where the Wimmera and the Mallee regions are. So although Australia is quite a vast country, for the purposes of this presentation, we're really looking at those specific zones. And as you can see, the rich blue areas of moisture on the left-hand chart versus the dry conditions we find ourselves in just prior to planting this year. So on the back of the good season that we had last season, growers are still quite encouraged and hectares will maintain, probably not lose hectares, might even pick up some hectares for this season. It's very, having said that, as I indicated before, the variations in the production were really coming from the yield, where we had a fantastic yield last season, maybe a 60% increase on yield last season. This year we need to revert back to an average yield condition. Three main districts that I mentioned before: South Australia, where South Australia has very wide range of production within the Yorke Peninsula, in that they'll have yields of 1.2 tonnes to the hectare. In the north, they could achieve 4 tonnes to the hectare in the south last season. Overall, an average of maybe around 2.2 million tonnes for the Yorke Peninsula last season, South Australia. This year, reverting back to an average yield scenario, could be back to about 1.4, 1.5 million tonnes. The Victoria Mallee region, 80% planted at the moment. That's of this week. These are discussions with growers and agronomists. With that, again, the Mallee would get an average crop of below a tonne to a hectare, maybe 0.7, 0.8 tonne to the hectare. Last season, they had fantastic results, maybe 1.2, 1.5 tonne to the hectare. The Wimmera, where growers might budget on 2 tonne to the hectare. Last season, they received 3.2 tonne to the hectare. So fantastic results last season, producing that crop of, say, just harvested of maybe 800, 900,000 tonnes. So coming back into the comparison again, just to pull back to see where we are looking forward. Dry conditions, as I mentioned, growers are planting in the dry, versus really good soil moisture conditions last season. Importantly, it wasn't just pre-planting soil conditions last season, but also the follow-up spring rains in Australia last year finished the crop and gave us really good yields. The Australian lentil crop doesn't need as much rainfall as, say, a cereal for the winter. It doesn't rely so much on winter rains. It's really made, I guess, in September for the spring rains. So what we're looking for now, planting in the dry, as I said, nothing really on the forecast for the next 2 weeks. Anything further out's a little unreliable. Not ideal conditions. So I guess some of the trade will now be looking at average yields at best for this season. Okay, I've already mentioned some of these things. But what I might just add there too is that there may even be a slight pickup when we're looking at the considerations of growers. I'll leave that on. Where growers are considering season, it's been a very profitable season last season for lentils. Some growers had shared with me some of their calculations versus wheat, and lentils were still economically in the economic value of wheat. It's really picking up a few extra acres around some of the small crops like hay. Hay prices have fallen dramatically in Australia in the last couple of months, as China has failed to renew imports for hay from Australia. So lentils may have picked up some acreage there. They're performing better than peas. Lentils don't really compete for space with favour beans. They're on a different geography, nor with canola. I mean, there's fantastic canola prices. I understand that there's a trade-off in Canada, but here in Australia, it's they're not in competing production zones. Okay, so if Australia was to produce a much smaller crop this season, as expected, maybe 500,000 tonnes. And look, that could be, you know, in current situations, as I said, no rain, no pre-planting rain, no rain on the forecast, all up to what happens over the next few months. That could be optimistic. So 500,000 could be optimistic. It's a fairly, let's say, an easily exported crop. Regular destinations you see, Bangladesh, Sri Lanka. Bangladesh is taking nearly 300,000 tonnes a year now. Pakistan and Egypt take nearly 30,000 tonnes each. It's not a hard task. And just a few final comments to leave you with. If India does require a steady import program this season, and if the dryness or the conditions in Canada don't meet 2.5 million tonnes of exports, or the quality has it's poor quality, then Aussie values will obviously firm to meet that requirement.
Well, I think that's it from Nick. I'm not sure if his connection is broken or if he's finished, but I think we got through the bulk of that presentation, just finishing on the final slide there, and some really good insights into the Australian crop. And I think last year was certainly seen as what we call one out of the box, an exceptional year, and not to be replicated. But we can see there the very strong export program that's underway. And we certainly have got a lot of supply in our system at the moment. Now, Pradeep, I'm going to hand over to you to do the Q&A, because I've also lost connection at this end. I don't have access to the Q&A easily on my phone. So if I could hand to you, Pradeep, just to continue with the Q&A on this session, that'd be appreciated.
Absolutely. Nick, there's a question for you, which says, how much of the increased yield last season do you put down to weather versus improved varieties?
Look, when some of these new varieties were coming out, they were touted to have, 10–20% higher yield. That obviously contributed to last season, but look, I think all the stars aligned last season. Very difficult to differentiate, I guess, out from exactly how much came from the new varieties. Having said that, I understand that some of the new varieties are allowing new areas, especially up in the Mallee, Northern Victoria, to be planted to lentils. So I guess where they're maxing out in the rotations in the Wimmera and the Yorke Peninsula, there are still opportunities to expand production with these new varieties coming on. I think that's the biggest tick up for the pulse industry here for lentils.
Thank you, Nick. Anurag, there's a question for you.
Yes.
NAFED 2 has not covered enough quantity to create a buffer. Any gap in government and trade estimates, and how would that affect the overall market, is what someone's asking. We have a question on that.
See, Pradeep, typically the government would really not like to buy too much of crop at MSP. This is there just to support the farmer, and the government is happy if the prices are ruling above MSP and the farmers are able to get better than MSP prices, which this year has been seen in lentils and most of the other pulses. So NAFED, of course, as a buffer if they wanted to keep certain stocks. So I do believe they have some very, very minuscule amount with them. Going forward, they may be thinking of buying, but and they were actually buying some quantities in MP, even at higher levels. But because of COVID and situation going out of control, a lot of mandis where these products were supposed to come, the mandis were shut, and even the state of Delhi and within NAFED also a lot of people were not well, and they were all affected by COVID. So this actually has caused a lot of upheavals, but I'm sure that they definitely wanted some buffer, but they do not have the adequate amount which should make them feel comfortable.
Thank you, sir. Nick, there's a follow-up question for you. How much inventories are left in Australia from last year's production?
Very little. I think a lot of it's being held with the trade now, and it's continued to have a fairly strong export pace after what the ABS stats have shown until the end of March. I don't think there'll be much carry-out stocks.
Okay. One last question. It's actually both to Nick and Anurag. Is the new demand from the new and upcoming sector of vegetable protein adding to the demand?
That is not seen so much in India, but I'm sure this is really catching a lot of attention in the western part and in the developed countries. So with regard to Australia, I did hear a couple of companies going into lentil proteins and isolates, but in India it is still to catch up. This is what I feel. Nick would be in a better position to comment.
Yeah, it's still a very nascent industry here in Australia, and the focus isn't lentils. It's high proteins, it's faba beans, it's lupins, it's not really lentils.
Again, question, sir, Anurag, to you. What is the contribution of the removal of stock limits in overall increase in prices of pulses and other agri commodities? Anything that you would like to say on that?
Stock limits, lately the government has not resorted to any stock limits. Of course, removal of stock limits do give a big relief to the traders as well as the millers, because such impediments like stock limits are like a sword hanging on your head. So I believe the prices have been going high because the government has been batting for higher prices so as to remunerate the farmers. The Prime Minister's vision was to double the farmers' income by 2022. And there has been inducement, at least on the pulses sector. The government has been after the farmers to grow more pulses and make us self-sufficient. And we have seen the numbers going up every year, year on year. And we have been lucky that the monsoons have been very good. We are blessed and the numbers have gone up. So I feel the prices which have gone up are helping the farmers come forward, and it's giving them the needed encouragement and boost to farm more pulses. This is what I feel.
Thank you. Ladies and gentlemen, we'll now come to an end with the lentil session, but please keep posting your questions. After the chickpea session, we'll again look at any leftover questions from the lentils discussion.
Pradeep, can I just come in? I just wanted to clarify with regard to the inventories, which Nick was at that time asking. I would like to clarify, I started off by saying that the trade estimate was approximately 1 million tons for the Indian crop. So typically out of this, we need to factor in a quantity of say 100,000 tons, which goes into seed, feed, wastage. So, and this year we saw an early harvest in lentils. By mid-February, we were through with the harvest. And typically the farmers, they want to sell their produce, at least they sell every year 50% of their produce in the first 2 to 3 months. But because of better prices this year, I think they sold almost about 70% of their produce. Which if you look at 900,000 tons, the 70% would be approximately 600 to 650,000 tons, which was sold by the farmers, of which almost 150,000 tons, as I said, was the local inventory of the Desai lentils. That means about 500,000 tons was already sold and consumed in the last 3 months, which I said 150 to 170,000 tons is the monthly consumption. So from 15th Feb to until 15th May, we were totally dependent on the Indian lentils, and we did consume this approximate figure of 500,000 tons. Now the quantity left in the hands of the farmers is about typically 250,000 tons, which will not come out immediately because some farmers will keep sitting on that and they will try to bring it gradually over the next few months. So even if we factor in the next harvest, which will come, say, by Feb, we have at least 8 months going forward to consume this 250,000 tons, which have not taken into the inventory, and this will come gradually. So even if at a monthly figure of 30,000 tons we take into consideration, and looking at the size of our demand and the size of our country, this 30,000 will fizzle out in minutes, and we'll not be able to track that quantity. So I'm sure that now people are clear as to where I was coming from, stating that the trade estimate was approximately 1 million tons, and why we are left with only about 150,000 tons. And this 150,000 tons of the Desi lentils are in the hands of the millers across Delhi, MP, UP, Maharashtra. This is scattered. This is not in any individual hand. Thanks.
Thank you, sir. Thank you once again, Mr. Tulshan, Nick, for your inputs. And we will now move into the chickpea session. And we start off with Nirav Desai to give the perspective on the Indian scenario. Nirav Desai is the managing partner of GGN Research and managing director of nickel commodities, and has over a decade of experience in the pulses and oilseed sector. He's an expert in conducting market research studies and has a huge amount of experience in futures market of agriculture commodities. An expert on the agro-futures, Nirav is also on the advisory board and product committee of both NCDX and MCX. He's also been invited to a number of national and international conferences to present research papers on subjects like cost of agriculture commodities to an Indian farmer, Rabi and Kharif crop outlooks for various agri-commodities, including pulses, oilseeds. Nirav, over to you.
Thank you, Pradeep. I thank IPGA and Pulse Australia to give me this opportunity. So topic for today for me is Indian chickpeas, Desi chickpeas. So I'll be sharing my presentation with you here. So the area for all over India looked to be about 4% higher over last year. MP had a lower acreage of about 6%, but purposefully I have kept the area of the last 3 years for comparison because there is a very clear trend change in India. So if we go to the first column A, that's 2018-19 sowing of chickpeas. So in Madhya Pradesh that time in MP, there was about 34 lakh, as in like 3.4 million hectares of sowing of chana, which has come down to 2.5 million hectares. So the acreage going down. Reverse is happening in Rajasthan. There was an increase in the last 2 years vis-a-vis the first year. But this year, the area has been taken lower than the government estimate. So the expecting about a 3,000 hectare lower area in Rajasthan than the government estimate. Gujarat we see is a big jump. So from 174K to 378 to 819. So this practically quadrupling in just 3 years. And if we compare to last year, it's about 117%. Over there's been quite a change. MP, which was the major state, now becoming a minor state, or I would say it's coming to the rank 2. Maharashtra going up the scale, matching up to MP's level. Rajasthan, which was the number 3 state, is still trying to hang around there. Gujarat coming up with a good acres this year or in the last 2 years. Majorly, the acreages, I would say, have been supportive, but we'll see what happens to the yields. Government MSP this year was 5,100 rupees per quintal versus 48.75 per quintal last year. So the government has increased, but the current prices are trading higher than the MSP. So the government doesn't need to intervene too much to go and buy on the MSP. So production, talking about the yields, in Madhya Pradesh had a lower area, and as we see the last 2 years, the area has been continuously decreasing in Madhya Pradesh. The yields this year were also quite poor. Majorly, the weather in the last 2 months were not very supportive to chickpeas. Going to Maharashtra, I would say Maharashtra though had a higher acreage, but the yields there could not give a big production. So I think the yields were below average. So we could not capitalize on the big acreage in Maharashtra. Rajasthan, the area as per government is higher, and as mentioned about in trade is estimated 300 to 400,000 hectares lower area, and the yields are also quite poor, especially in the western Rajasthan area. So the yields have been quite poor, and this year the monsoon rains and even the follow-up rains in western Rajasthan were really, really poor. Gujarat is the only state, I would say, which is come out with a good area, and the yields are also above average. And I don't need to say that anybody trading into India and chickpeas is already seeing that Gujarat has come out as a big supplier. This year, traditionally, chana used to go from Maharashtra and MP to Gujarat, and this year it's going the other way around. Gujarat is selling chana to north and is giving to Madhya Pradesh. So that's the reverse. So overall, the production for all India is now below average, majorly due to poor yields in MP and Rajasthan, and not great areas in Madhya Pradesh and Rajasthan. The only state that has come up is Gujarat, but it has a very small number of acres. If you see, it's about 800,000 compared to the bigger states like Madhya Pradesh and Rajasthan having poor yields and lower area. Maharashtra had higher area, but as I said earlier, the yields were below average. So we expect the Indian crop to be about 8 to 13% down vis-a-vis last year. Now, what do you see as the supply demand situation? Sorry, so I'll go first on the NAFED. So NAFED till 14th April had procured about 248,000 tons of chickpeas, whereas their target was about more than 2.7 million. This was just 9%, and last year's NAFED stock was much higher. So this year NAFED does not have a lot of stock, and so we can't see NAFED coming and intervening in the market again and again, giving their supply. So we're going to be broadly dependent on the market supplies rather than the NAFED supplies. Supply and demand scenario. The opening stock this year for chickpeas is lower than last year. It's about 20% lower. Production, as I mentioned, is about 8 to 13% lower. So total supply, because of the opening stock and the production being lower, is going to be about 12 to 15% lower. That's a good decrease in the total supply. At the start of the season, when Rajasthan was yet to be harvested, the expectation was a slightly lower reduction, about 5 to 10%, but now I think crop is 12 to 15% lower. Coming to consumption, last year we had two important things in the consumption, and that is we had the government giving the free distribution scheme that was there, and there was, I would say, a lot of still the COVID situation last year versus this year is different, because last year was more like a preparatory lockdown by the government, where there were not so many number of cases, and especially the rural India was not touched by COVID. And now the current situation is such that from urban India, COVID has widely spread into the rural India, and we feel the COVID and the absence of this free distribution of government scheme, the consumption may be nearly the same as last year or maybe low by 2 to 3%. Though just now there is I would say about 80% of India is under lockdown for last 4 to 5 weeks. We expect this lockdown to continue at least for 3-4 weeks. And hopefully if we come out in 3-4 weeks, this is the consumption scenario. If the lockdowns extend, which doesn't look to be like that, then we'll have to review the consumption scenario. We've taken import and export with a negligible change, because import as of now, the country has been buying from the non-LDC, from the LDC countries, because the non-LDC countries have a high duty of 60% and a cess of 10%. So that comes to net 66% import duty. So that is not happening. And export is majorly for Kabuli chickpeas. and the end stock we expect is going to reduce by 40 to 50%. So the bullish factors we see in chickpeas this year-on-year decline in production due to unfavorable weather despite the rise in acreage. So initially, because of the rise in acreage, there was a lot of expectation that the Indian chickpea crop would be higher. To then, I would say in the mid of March, we were expecting the crop to be slightly lower by say 5-7%. To now finally where we are coming is about 8 to 13% lower. So there is a big change. Low opening stock. NAFED is carrying comparatively very low stocks than last year. So the government intervention, as I mentioned, will be low. Disparity in chana imports mainly due to higher import duty from the non-LDC countries. Yellow peas import has broadly stopped, and there are a lot of policy issues with the yellow peas import as of now. Another thing which is not directly related to chickpeas, but is most of the other pulses like pigeon peas, red lentils, black mape have tight supplies, and the overall environment in the pulses industry is supportive. Last but not the least, the Indian government wants to double the farm income. So I think the government policies would be more favoring to the farmers, which will eventually be more supportive to prices. The bearish factors, surge in COVID-19 cases has renewed lockdowns, closures of the HoReCa sector, and currently what we are seeing in chickpeas, the market is clearly on a supportive trend, but we don't see the price of chickpeas going up because the current dispatches are not that great from the factories. The trade is already carrying stocks and their final sales to the users is not good because chickpeas is used, a big part of chickpeas is used in the HoReCa sector to make a lot of Indian savory snacks and other things. Also, farmers may liquidate their pending stock after the lockdown is over, but we don't expect a large supply with the farmers. So there'll be one selling that will come once the lockdowns open up, and that will be, I would say, the last selling from the farmers. Then there would be not much selling later on in the year. Now, this is a scenario if the chana prices really rally, the government might have to think on lowering the import of chana from the non-LDC countries. That will be a factor that could, on the long run, affect the market. Government may change import policy of yellow peas, like there is a MIP, the government might think on that, the quota issuance that's not been happening, or finally a duty reduction. So government has that duty or the import policy factor, which is going to be there to control the prices in the second half of the year if the prices rally too much. Government may allow additional import quotas for other pulses, again, though not a direct substitute, but because we are talking about the overall pulses scenario, the quotas that come in for pigeon peas or for other pulses do affect the sentiment of the market. So this year, chana price is likely to remain firm and a substantial uptrend on the tight supplies of India. However, only major setbacks can come from the government. They change its import duty and import quotas or the policy. Thank you.
We have.
Pradeep,
can you hear me now? Am I audible? All right. Thank you once again, Nirav. We'll take, there are some questions coming in, but we'll take them once we have the Australian review from Peter. As we move on to Peter Wilson, Managing Director, Wilson International Trade, a business focus on providing superior services to global agribusiness. Peter, a postgraduate in agribusiness, has been the immediate past chair and board member of Pulse Australia and has held board and C-suite and senior trading positions for listed and private international trading and logistics companies in Australia and Canada. Peter is an executive committee member of the Global Pulses Confederation, as well as a board member of Regional Development Australia, Darling Downs and Southwest, which is responsible for determining strategy for the region regarding development, sustainability, and resilience. Over to you, Peter.
Thanks very much. Of course, namaste, namaskar, and welcome to everybody. And I acknowledge all my Muslim friends with Eid Mubarak. And of course, here, further reiterate comments by both Nicks in terms of us following very closely the developments with COVID in India and the impact on the Indian people. And our hearts certainly go out to everybody in India and those places affected so badly by COVID. If I can just start by acknowledging Saurabh Bartier as one of the best numbers men in the business, but I also wanted to talk about cricket. There has been 27 test series played between India and Australia. In fact, post-independence in 1947, Australia was the first country that the Indian cricket team toured post-independence. So the relationship is very long between our two countries. I will say out of the 27 test series played between Australia and India, 12 have been won by Australia and 10 by India, and there has been, I think, 5 draws. So it's a very warm relationship. We have a very slight edge. We won't talk about the recent tests because India does hold the edge, but statistically we're looking good. And I guess I'll just start my presentation now, and I want to applaud the IPGA and the Australian India Business Exchange and Austrade, and of course Pulse Australia for their vision in keeping the dialogue going. And I guess if I can just make sure this works. You know, the bottom line is if we aren't talking, we're not doing business. And I think we all accept there are some impediments to doing business between Australia and India at the present moment, and government policy, and we accept that India has the right to self-determine their policy. But I just make the observation that it's very, very hard to legislate supply and demand. And I think ultimately that will come to the fore, and there'll be a realization that to create such distortion in the market ultimately won't help Indian consumers, and it won't help Indian farmers. And from an Australian perspective, and indeed other countries, you know, we are getting on with doing business. But I applaud the dialogue that continues between Austrade, Pulse Australia and IPGA to ensure that we are there as policies evolve and you know, create an environment for trade. So on to, you know, where we are from an Australian perspective, and I'll just start with the orientation slide. It's very clear, very important for people to understand where the best beaches are in the world, and that's in the state of Queensland. And of course, the best Desai chickpeas in the world are indeed produced in northern New South Wales and Queensland. So that helps to give you an idea of where we are in terms of production. And if you are looking to visit post-COVID, then we do have the best beaches for you to come and have a look at as well. There's been a lot changed in 12 months, and Nick Poutney correctly pointed out the significant change between seeding time this year versus seeding time last year. But it's a bit of a reverse in Northern Australia, because whilst it was dry in Northern Australia this time last year and wet in Southern Australia this time last year, it is actually very, very wet in Northern Australia at seeding time this year, following very, very big summer crops through much of Northern Australia. And in fact, I share some photos here of recent heavy rainfall that saturated much of southern Queensland right through to central Queensland and a little bit in northern New South Wales. But we grow our crops, we grow Desai chickpeas on deep subsoil moisture. And we do have a full profile here in Northern Australia. You'll see there's a crop on the screen. I think in Hindi it's known as surti papti, which we call faba beans here in Queensland, and typically doesn't produce a grain, but it does in India. And that particular crop in the photo was chest height. Such was the very, very good moisture conditions that we've had in Northern Australia for the last few months. So we are ready for very, very ideal seeding conditions for all crops in the northeastern cropping zone. So we don't share the same issues that are currently facing lentil producers in southern Australia. Since last we talked about Desi chickpeas, it was February, I think, the last discussion we had. You know, we've seen very strong wheat markets. We've seen exceptionally strong corn markets. And of course, we've seen the Australian Desi chickpea market rally, you know, 40, 50 bucks since February, to be sitting close to sort of $700, which is pretty good money in terms of farmer returns back on an on-farm position in Australia. So there's a lot to encourage farmers to consider planting Desi chickpeas or continue to plant Desi chickpeas, regardless of the policy position that we currently face into India. Now, one of the things that is tempering the increase in areas sown to Desi chickpeas in Northern Australia is the legacy of very dry seasons. And I'll show you a slide shortly that works through the very, very small Desi chickpea crops, and in fact all crops that we've had over the last couple of years because of debilitating drought. Now, what drought does, and doesn't matter where you are in the world, it leaves soil bare. So many farmers, particularly in Queensland, who didn't have a lot of what we call stubble cover, may well seek to plant probably wheat rather than barley, but they'll certainly be seeking a cereal to go into their farming rotation in slightly elevated percentages to try and ensure they have ground cover post the harvest. Because in the absence of ground cover, if you get a lot of rain or you get a lot of wind, you'll suffer erosion. And so farmers are very, very keen to replenish that protective cover, that mat, that carpet that ends up on a paddock post a cereal crop versus a pulse crop. A pulse crop doesn't leave the paddock once it's finished with very much cover, very much protective cover. So we are seeing in Queensland some of the area views being tempered because they want that stubble cover. So we'll need to watch it very, very carefully over the coming weeks to see what we end up with. But farmers continue to enjoy Desi chickpeas. Chickpeas are a profitable part of a farmer's rotation. They used to be a bit of a religious, they were like a religion. It was very important to have a legume or a pulse in the rotation to help with soil health and ensuing crops. But Desi chickpeas, and in fact most of the pulses, are indeed a significant financial part of the rotation. Farmers know how to grow them well, and they grow independently profitably compared with pulses and oilseeds in Australia. So we had a high watermark in 2016-17. Now you'll notice up the top left of the figures where we did seed over 1 million hectares of Desi chickpeas, and we produced in excess of 2 million tonnes of Desi chickpeas. Sadly, at the end of 2017, we saw the Indian market close, but following that 16-17 year, we started to see drier conditions start moving through that Desi chickpea belt. So even though we had significant areas sown the following year, we suffered significant losses in terms of yields, and that reduced crop size. And of course, 18-19 and 19-20 were again part of those very, very dry production years. They weren't years where farmers made seeding decisions based upon market access, or particularly Indian access. They were largely limited by moisture. And so we did see a massive collapse in area sown in those couple of years following 16-17, all based on drought, which I talked about before, and which is creating some legacy issues for us this year because farmers do want that protective cover on their farmland. So we fast forward to 2021. We can certainly anticipate an increase we've seen an increase in area sown, and we've seen some recovery in yield, and so we moved to about 800,000 tonne crop for the last harvest that's just occurred at the end of last year, and again it showed the confidence for farmers to go back in and double the area sown to Desis, and to a lesser extent Kabuli chickpeas, but certainly Desis. And we have seen the export pace thus far has been quite fast. We've got about 500,000 tonnes already out the door as at the end of March. And typically we would be at 54% of total exports would happen in the first 6 months of the marketing year. So in round figures, in theory, another 400,000 tonnes to go. And that's even without Indian demand. Now, it's largely at the hands of Pakistan. We've seen significant demand from Pakistan, given their dry finish and smaller crop. But what it's showing is we are seeing decent market access for Australian Desi chickpeas, and they are moving, and the market is moving higher. And so that will give farmers significant confidence to actually, for the 21-22 year, to just potentially sneak up that area a little bit over 2021. But it may be only New South Wales that we see area growth, whereas Queensland, the view is that we might be actually seeing the status quo remain in terms of area because of that stubble need. That's the sort of the view from the agronomists in this part of the world. But we have also got reasonable depth in markets. You can see how India has literally dropped off the cliff since 17-18, where we saw very, very small amounts of product shipped to India before the door was firmly shut. But this year you can see Bangladesh, Pakistan vying for significant volumes. They're very steady. They've been steady buyers. And we've obviously seen volume going to UAE and to the Nepalese markets. It'll be interesting to see whether we do get the opportunity for Iran to move back into the direct import business, and we'll be encouraged if that market does in fact open up. But I guess the bottom line is we do have farmers in Australia that like growing Desi chickpeas. We have the moisture conditions to support a pretty good crop outcome starting from September, October this year. So if in fact the Indian policymakers do change those settings, I think Australia will be ready with a reasonable crop at that time. And particularly if the season continues the way it's running, then we could test yields that we haven't seen since 2016-17. And if we just flick back quickly to 16-17, we did have 2 tonne plus per hectare crop outcomes. So we could certainly produce a crop into the million tonne range if in fact the weather remains very favourable. We can certainly do that. So that's probably where I'll leave it, team, and happy to take some questions. And I probably wanted to pose a question to Nirav. And what's driving the significant area fluctuation in Indian states? That's my privileged question to you, Nirav.
Sure. So I'll answer to that. Okay, your paper is over. So Peter, so basically the area in Madhya Pradesh has gone to wheat, and for Rajasthan the area was basically we did not have rainfall that was required for the sowing only. So the Western Rajasthan area was lower by that. So these two states we lost majorly in the acreage. And on the other hand, we had a little increase in acreage in Maharashtra, but the yields could not perform well. And Gujarat was the only state where the area was higher and the yield was good. But because that's not a very big state acre-wise, that could not support the crop production quite a bit.
Thank you,
I
Nirav.
think one important point is going to be this. Yeah.
No, continue.
Yeah. So last year we had, the last year we had the NAFED stock, which was keeping a check whenever the government wanted to kind of give out stocks. But this year we don't have that check also.
Thank you, Nirav.
Yeah.
And Peter, thank you very much for kicking off the Q&A with your own question. We have a few questions that have come in, and the first one I'm actually going to throw to both of you, Peter and Nirav. And it's actually great because, Peter, you mentioned in your presentation about the offtakes from Bangladesh increasing. So there's a question here, and it says chickpea imports by Bangladesh have been going very strong during the Jan-March 21 period as compared to the same period last year. What may be the reason behind the strong buying? And I'd like to add to that question is, how is it then going to impact the availability as well as prices if India does come into play with a higher requirement of imports? So I'll have Peter and Nirav, even I'd like you to respond to that, please.
Bangladesh has always been a fairly steady buyer of Australian Desi chickpeas. The Bangladesh market is, I always say the Indian market is much more an industrial market, and of course there's an enormous amount of Desi chickpeas consumed whole in India as well, but a lot of it is processed. A lot of it's turned into chana dal and besan. Whereas Bangladesh is largely a whole chickpea market, and they value highly the shape and the size and the colour of the Australian Desi chickpea, whereas some of our competitors, even some of the Russian product that I've seen, Ethiopian and Tanzanian, it tends to lend itself to, well, certainly the Ethiopian and Tanzanian, the Iranian market values that because it's a smaller Desi chickpea, but the Bangladeshis prefer the larger style Desi that is produced in Australia, and more particularly in Queensland and very northern New South Wales. They want that golden pea. And so typically we don't have a lot of competition into Bangladesh from other origins. And the Bangladeshi market has been, it seems, relatively stable. They do try and peak a little bit before Ramadan, but we really see fairly steady shipments to Bangla over the course of the year. Pakistan, of course, has come on stream very heavy and hard this year because of its own problems. But Australian logistics have been problematic, but they've been functional. It's been a tough year logistically, and other speakers have spoken about it, and it has been brutal. Shipping lines have been increasing freight rates, equipment has been tight, blank sailings have been common, and but through all of that, we are making shipments and product is getting out the door. And so probably the reliability of those shipments is also creating solid demand as well.
Nirav, your thoughts?
I think majorly Peter answered this.
Okay. Peter, here's a question for you that comes in again. If we consider that India cuts the import duty on chickpea, then what will be your idea? How much Australia can export, looking at strong and consistent demand, mainly from Pakistan and Bangladesh? In this person's view, both countries can absorb at least 5 to 6 lakhs ton of the chickpeas before new crop.
Yeah, I think, and this is where I probably come back to that earlier comment about trying to legislate supply and demand. It's very difficult. We are speculating whether the Indians might, or the Indian government, could play with a 66% duty, whether they make it, 30%, 40%. If it gets to 10%, it would change the demand structure dramatically. And if Australia is fortunate in terms of, I think the area probably is going to be stable. If we get a really, really good yield outcome and Australia does produce, a north of 1 million tonnes, then I think it could disappear quite quickly. So I think we see Desi chickpea prices, maintain at these sort of levels. And of course, if India does change its duty structure, then India is going to be out there competing with Bangladesh and Pakistan, the UAE, and possibly Iran. And I think that, Australia at 1 million tonne production, if things go well, and maybe 1.2, 1.3, if things are exceptional, I think that could disappear quite quickly. I remember in 2016-17, we exported, I think, 1.6 million tonnes to India alone. So we know these markets can move volumes, and we know that, we're currently looking at very dry conditions in southern Australia. We're looking at dry conditions in India, which could impact whole yellow pea and red lentil production. And whereas in Australia, we have a slightly more flexible seeding window, not so much in southern Australia, but in northern Australia we do. In southern Australia, we certainly have a much more flexible seeding window than in Canada. Saskatchewan has 110 frost-free days. So the clock is ticking in Canada right now, and a fair bit of Saskatchewan, which is the heartland, is very, very dry. And that could well impact significantly yellow pea production. So, if India has an issue, and if the southwest monsoon is slower to develop, and we have continued issues with stocks getting tighter, then by the time we get to September and October, we could be off to the races in a whole host of things, including lentils, Desi chickpeas, and yellow peas, based on supply-based problems in India and in Canada and in southern Australia. So, it could be quite the interesting few months.
Nirav, would you like to add to what Peter said?
Yeah, so basically, I think India would be falling short of cargo this year. The crop stock is also going down. The production is also lower. We don't have an option from the LDC countries, a very minor supplier, but will totally depend on the government policy. Yes, also we don't have the NAFED stock as last year. So we look up to Australia as a good supplier, and they've always come to our rescue. And I think that there could be a possibility that this year we do something if the government policies change in 2-3 months, depending on the price situation here and the supply situation here.
Okay, there's a very sorry. Yeah, please.
And if I can just add to it, and this again comes back to government policy. If India was indeed open for business, then you would absolutely have seen, you'd see seeded area intentions here in Australia change from what I just put up on the screen. There's no question that whilst we've been largely limited output in recent years based on seasonal conditions, farmers they've been confident enough to plant Desi chickpeas, but they haven't gone silly. They've taken the message quite clearly that if they go too bullish with area sown to Desi chickpeas, then they won't have the market outlets. And so if India wants to encourage the availability of product, then I think they need to send signals now. Changing the duty structure in August isn't going to make any difference to supplies of Desi chickpeas from Australia. If they change the duty structure next week, we could probably seed another 150,000 hectares of Desi chickpeas over the coming 4 or 5 weeks, and we could change the availability of product. And so timing is indeed critical, and my only encouragement is for the government to look at what's happening, because making the change in August and September isn't going to it's not going to appear by magic. It needs to be planted in the next 4 to 6 weeks.
Again, I'm going to ask both of you all to react. There's an observation or a comment from a very senior member from the trade. He says even if Indian government relaxes import duty, it might not make much impact as the exportable quantity from Australia is much lower than the shortfall in Indian production. Which one of you would like to go first? Peter, Nirav?
Peter?
Oh, well, there isn't a lot of product left now because we are limited as to what we've got what we've got in from last year's harvest.
Mm-hmm.
My point is, if they did change the duty structure today, tomorrow, then we as Pulse Australia could get the message out there quite clearly. Nick could send a note out tomorrow and it would absolutely move the needle in planted area. We would see farmers, they would actually say, well, we were going to plant more wheat because they want stubble cover, but they would say, well, hang on, India is back. India wants our product. We will seed more Desi chickpeas. We could change the area sown to Desi chickpeas, but we need to make that decision fairly quickly. As it stands, I think farmers are going to be solid. They'll plant their 600,000 hectares, but if we want to pre-position a much bigger crop, then those signals need to be given by the Indian government quickly.
I presume that the Indian government may not react very fast. A, the prices are still under control for them. B, I think they are a little pro-farmer. They want to double the farm income, so where basically they are more supportive to prices. But yes, I can say, as much as I discuss with the industry, we expect a softer stand on chickpeas than on yellow peas from the government side. So any actions that might happen may come first on chickpeas and then on yellow peas. So that's the situation here. And I think this might be a year where late reactions may come in from the government. And then whatever is there from Australia or the other parts of the world that can come in, will come in if the government takes the right decision.
Nirav, I have a question for you. You were talking about the HoReCa segment in your presentation. Now, looking at the lockdown phase last year when the first wave of COVID hit India, a lot of consumption at the HoReCa level had dropped to a huge extent because businesses were shut down. Now, this year, the lockdown has come in. There are restrictions, but the HoReCa segment is being allowed to function, whether it is in restaurants where they can take home deliveries and carry-aways. So there is a level of consumption that is already there in the HoReCa segment. So do you expect this consumption also to impact some of the movement and the pricing for the product in India?
Yeah, so basically currently the situation is such that the HoReCa sector is not buying because their final sales is not happening too much. Now, there are different sectors in the HoReCa. So typically a catering industry is totally shut. There are no functions, there are no banquets, there are no marriages. Going on to the restaurant, though the restaurants are doing the home delivery. But if we take restaurants are a very big, broader picture. We talk about the rural India, these are the snack shops. These are the hawkers that go everywhere. So all these are in 80% of the countries closed just now. They are not eligible for home deliveries. A very elite restaurants which do home deliveries, and I think home deliveries are also up to 20% of the restaurant's volume. So I would consider that the restaurant industry is also functioning all over India basis only 5%. Only demand that's happening is to these manufacturers who are making savories or who are making chips or making any of these snacks. They are functioning with a 50% capacity and they are distributing, but they are also facing the same problem that their demand is slow. They're able to function, but nobody's traveling, nobody's visiting, nobody's going for picnics, nobody's meeting each other. So all that is not there. And the additional thing is last year, we had the government declaring all these free food distribution. This year, the government's focus is not on food distribution. It is on total medical infrastructure to help people fight COVID, to build up hospitals, to provide oxygen. So different challenge this year. And I think people are also, last year they were happy and merry and they were enjoying in the lockdown at home. This year, everybody's troubled here. I think all of us have very close people who are troubled, who are in the hospital, and we are searching every day. 2 hours goes to just inquire about our friends and relatives' well-being. So it's a different situation. So people are not in that kind of consumption mode this year that was there last year.
Thank you. There's an interesting point here that somebody's put up on the Q&A, and I think the two of you will be able to tell us whether it's actually happening, that with oilseed prices quite high, do you see any acreages in Australia and India being diverted to oil seeds from chickpeas or other pulses?
Pradeep, from a Northern Australian perspective, no, simply because we don't grow much canola in Northern Australia. The canola is all produced in Southern Australia. Nick has correctly identified that we may not see a lot of cannibalisation of lentil area by canola, but certainly canola is a very attractive option for many farmers. And Nick Goddard could probably speak to the oilseed, but from a northern perspective, there would be almost no impact on Desi chickpea output as a result of canola. But again, you know, I point you to Canada, and you know, there's Canadian farmers that can plant. You can bet they're cannibalising pulse area with canola right now. Maybe Nick could comment from an Australian canola perspective.
Nirav, before you step in, let me ask Nick to react. Nick?
Sure. Yep. Thanks, Pradeep. Yes, certainly in those southern districts where canola and lentils are both in the rotation, there is more of a swing to canola this year at the expense of lentils and faba beans, purely driven through the price of canola. But we've got to a point now where we've basically exhausted supplies of canola seed. So growers now have the option only of either, you know, cereals or pulses. So if people we're going to make that decision, they've already been made.
Nirav, over to you.
So basically, first thing is chickpeas. Now the next sowing comes in October 2021. So basically that's quite far off. Major part of chickpeas area doesn't collide with the oilseed area. And I would say rather chickpeas is fighting acres more with the wheat in MP and Maharashtra, the major states. So I don't expect that. Yes, but for other kharif pulses like moong, urad, in Maharashtra, you might see something like that happening because the soybean prices are quite high, the oilseed prices are quite high. So you might have a little impact, but the situation is such that the oilseed acres, say example for Madhya Pradesh, for soybeans, the acres about 5 to 5.5 million hectares. Whereas urad acreage in MP would be 0.4 million hectares. So it's a very minor crop in front of the soybeans. So still, I would not expect a big decline in acreage into pulses, because generally the pulses price are also staying stably firm in urad and moong.
Thank you. I'm going to come back to the lentils part of this and put a quick question to Nick Poutney. Probably this is a question from a member in the audience who's probably joined in late. He wants to know what's been the production for lentils with Australia, and what kind of quantities are left over, and if they're low, why are they very low? Nick, you need to unmute.
Back through the presentation again?
No, you can just put up a few points.
No, look, really, I think last crop just harvested, fantastic results, really, from a boost in yields, maybe 60% over and above average, giving us a crop last season of maybe 800, 900,000 tonnes, maybe. Whereas this season, dry conditions, looking at an average yield at best due to the poor dry start. Same or slightly better acreage, so maybe a 500,000 ton crop more or less for that we're just planting now. There's a lot of water to go under the bridge. If it is a 500,000 ton crop, the other thing is it's quite easily exported. Regular customers, Bangladesh, Sri Lanka, and so forth. So if India steps into the market, terrific. But as with the chickpea, we'll need to compete for ownership. I reiterate what Peter said before. I mean, the impression that Australian growers get from the Indian government with the duties imposed is that India is not open for business, that India is not a market for Australian pulses, and therefore growers have adjusted their rotations and their price expectations accordingly. When there are windows where the duties might be reduced, those windows are not in a period that can influence grower production concerns or rotations. They really impact trade flows that the traders can influence. So yeah, that's the conundrum that we have.
Thank you, Nick. Now, I'm going to put this question to all of you all, Anurag ji, Nick, Peter, and Nirav. Of course, one definitely knows that the supply-demand scenario for any pulse or any product finally decides what price it sells at, or what price a trader buys at, and what price it sells at the retail end. Now, apart from this, increasingly from what we've heard in the various media reports and we've been reading and hearing from the trade, that logistics is becoming a nightmare with the availability of containers and ocean freights going up. I think some of us also mentioned that in your presentations, that yes, ocean freights are going to be a problem. So going forward, what kind of a percentage of that pricing of a particular pulse do you think is going to be eaten up or going to be an effect of the logistics costs going northwards? Anurag, can you start with you? So you need to unmute.
Sorry. Basically, freight rates globally are going up. There is a mismatch and there is an acute shortage of equipment. Prices, like typically, to give an example, just 2-3 days ago, ANL as well as MSC, which are the two major shipping lines out of Australia, without any prior notice to the trade, without any inkling, they just went in for a GRI of $700 per container. So if typically you would be stuffing 25 tons to a container, that would mean that your price would be up by almost $28 per ton. So if you take into account, say, chickpeas, which are selling at $680 or $700, a component of $30 going up for no rhyme or reason, just out of, like, just suddenly. So it translates to almost 4 to 5% of the cost. And this is an additional burden. Secondly, as I said earlier in my presentation, that the bulk freights, just to give an example, from Canada to India for lentils, it's gone up from 30 to 70. And even at these rates, the owners and the crew are not willing to come to India because of the COVID situation. So we have to be very cautious about the freights, because this could create havoc. And in the near term or in the very near future, I don't see these freight rates coming down. I think Peter would be in a better position and Nick would be in a better position to share their perspective.
Nick, Poutney, to you.
Look, the only thing that I would say is that these jumps in ocean freight, as rightly pointed out by Anurag, makes it terribly difficult to price anything forward as well. There's the lack of availability with lines not wanting to come to India potentially in the next few months, but also how many jumps in prices per metric ton, and at what level are you comfortable to trade new crop Australian with all these unknown on the freight rate? It's increasingly becoming a high percentage of the CNF price.
Pradeep, I would like to come in once again, just to give an example. Most of our trades are done basis future trades for far off months. Here, because of this uncertainty on the freight account, no shipper, be it Canada or Australia, they don't feel comfortable doing far off trades. Like if you were to buy new crop lentils from Canada or Australia into India basis containers, there would be very, very few shippers who would take the risk or who would give you a number, or if at all the number would be there, they would definitely have a cushion towards the increased freight rates. Another example I'll tell you with regard to India, where we are heavily dependent on Myanmar for the supply of black mape and pigeon peas. Because of the problems, political issues in Myanmar, the freights from Myanmar have gone from almost $25, $30 to $100 per ton. And there were 2 sailings every week out of Myanmar into India, and now there's only 1 or max 2 sailing per month. There is a mad scramble to get containers. Even at $100 per ton, that is $2,500 per TEU, you're not able to get containers. So you can imagine a freight component of $30 translating to $100. And on top of that, there is no surety of the vessel that there will even be 1 sailing out of Myanmar every month for India. So these are really uncontrollable factors, and we need to keep this into account. The government here also needs to know about these issues and accordingly take decisions when they go forward allocating quotas and thinking about other issues.
So would you say about 10% or 5% of that overall increase is going to be attributed towards these logistics costs?
If you take into account the Burmese pulses, yes, almost 8%. There's a cost because of the freight element. It's
I'm talking in terms of not just Burma, but globally, like whether it's Australia
5%,
or.
I think, Peter, would you agree if I would say it would be conservatively approximately 5%?
I think historically, you're probably, round figures, maybe on chickpeas and lentils, you probably say the CFR cost is probably 10% freight. And so if historically $500 for lentils, your freight was probably $50 or something like that, and give or take. And I think the point some of the speakers have made very valid. It's not so much the whole price. It's the volatility around the end price that you pay and the availability of the equipment, because there is no question that the shipping lines can largely, just because you have a booking with a shipping line at a certain price per TEU from point A to point B, when you come to get that equipment, they can choose not to make the equipment available at that agreed price, but they can agree to make equipment available at a new price. And if you've got that forward sold, and as Anurag rightly said, further out, then you may be pricing, you might be looking for a 2 or 3 or 4% margin. If the freight goes up by 5 or 6%, you're in the glue. So it's not so much the whole value or the component of the freight as part of the entire CFR cost. It's the volatility around the freight price that you might be subjected to that increases the risk beyond the capacity of most traders to absorb. So I think that's really the issue. But in round terms, historically, 10, 12% or 15% of the CFR cost would be your freight rate, roughly. But it's the volatility is the problem.
Thank you. Nirav, any observations?
I think they both address the issue that the rates have been going up, and I think this situation is going to continue for some time. And freight is a very important factor for the trade flow to see. Majorly looks to be firming up or remaining firm.
Okay, thank you, gentlemen. I'm now going to hand you back to my co-moderator, Nick Goddard, to take this forward. Over to you, Nick. And gentlemen, thank you very much for your support today. Nick, over to you.
Thank you, Pradeep, and a marvellous session then on chickpeas and some really good questions that followed. It's up to me to actually introduce now our final speaker, and I did forget to acknowledge him at the beginning, and that is Mr. Staurt Rees, who is the the Consul Commercial and Acting Senior Trade and Investment Commissioner for Austrade. This webinar today has been held in conjunction with Austrade as part of the Australian India Business Exchange. So Staurt was appointed to this role in August 2019 and managed the Australia-India Business Exchange Program in 2020 and again this year. He was previously Trade Commissioner to Thailand and undertaken short-term postings in India previously and also in New Guinea. So I'd like to at this point introduce and welcome Staurt, who's sat through this webinar and no doubt is an expert now on pulses. So Staurt, I'll hand to you for the closing remarks, and thank you.
Thank you very much for that, Nick. And there are probably several that don't realise my background is in farming originally. So it's a topic that's true to my heart and one that I do find really quite interesting. There's some specific people I want to mention and thank. Saurabh, Bartier, thanks for opening today. You were really great at setting the scene. And thanks to Pradeep, CEO of the India Pulse Growers Association, and to you, Nick Goddard, CEO of Pulse Australia. We really thank you for agreeing to share the information today, making it a real knowledge sharing webinar and an opportunity, as Peter said, for keeping the dialogue going in order to keep business going between the pulse industry of both the countries. To our panelists, Anurag, Tulshan and Nirav, Desai from the Indian side, as well as Nick, Poutney, Peter Wilson from Australia. Really interesting to hear the discussions about the trends and forecasts and plantings and so forth for chickpeas and lentils. And lastly, by no means least, I want to thank the audience.
I think we've lost Staurt there, so I think I'll just pick up where Staurt left off, unless he comes back online. Just to finally thank the audience for participation. We had something like 600 participants register for this webinar, and we had many participate from both India and Australia. And I think we would close this webinar by saying it was a great success, and thank you all for your contributions and participation. Thank you.